Hi guys, KP this side. Hope all of you are doing good and wish you all a happy Diwali 2022. And I just hope and I pray to God that this next 1 year turns out to be a great year for everyone out there and all our dreams come true in next 1 year. Uh, this is basically vlog number 43. I got lots of messages asking for my recommendations for the Muhurat trades and uh, also on how I see the markets going forward. If you would have seen vlog number 41 and 42, where I have done a comprehensive coverage on how I see markets going forward, which was like around 1 month back we did vlog number 41, and around 15 days back I did vlog number 42. And if you would have seen those videos properly, and if you would have seen how things worked out in the last 1 month, fortunately for me, everything went as we discussed. Uh, Especially with the IT sector, guys, if you would have seen the results for this quarter has been better than expectations for most of the IT sector companies. Uh, I think the results for Wipro were not up to the mark, but apart from that, most of the IT sector companies have given very good results. Not just that, most of them have given good guidance also for the upcoming quarters, even though the global scenario, especially in terms of US and Europe, are not very, great. Still, these companies have given good guidance as far as their client base is concerned, their book order is concerned, and their profit margins are concerned. Everything looks to be going right on track. So, first, we'll just discuss a bit about how markets are placed right now, and then we will definitely consider a few of the stocks which I feel you can consider buying during this particular Muhurat trade. So, first of all, if you would have seen, like just I told you in my last couple of videos, overall, if you see the US markets, I already told you have corrected a lot. From that point, the chances of the markets going down in US, especially the Dow and Nasdaq I'm talking about, the chances were quite less, and that is exactly what happened. These markets have shown some very good signs of recovery. Uh, it's still not, the one-sided kind of a upside which has happened in the US markets, but overall now things are coming back on track even for the US markets. Uh, at no point of time we can assume that things are only going to get better from here, but overall what I told you was that if US markets are going to do well, then even for Indian equity markets, that is going to create a kind of a push on the upside, and that is exactly what happened. If you would have seen the Indian markets also, we closed around 17,500 on Friday. Bank Nifty especially has done very good, which is again, above 40,000 mark. And one big reason for that being the banking sector stocks have given stupendous numbers. A lot of predictions were being made that because of the businesses getting hampered to some extent because of the geopolitical tensions, the NPA, the non-performing assets for these banks may go up, resulting in lower profits and more of bad debts. But luckily, this did not happen. In fact, the NPAs, if you compare with last year, have been on the lower side. One big reason for that being we have come out of COVID, economy is recovering. If we keep aside this geopolitical tension, which has stemmed out of the Ukraine and Russia war, from COVID scenario, if you compare today's situation, economically it is better. But just because of these geopolitical tensions, we have a mixed kind of a view now that because of geopolitical tensions, markets won't perform, and because of coming out of COVID, companies should report better numbers. So that dilemma is still there. But overall, if you ask me, IT sector stocks have given very good numbers. Banking sector has given good numbers. FMCG has given good numbers. Cement sector results haven't been good for obvious reasons. Again, there were cappings being done on the price at which they can sell. There were some restrictions on the exports also, and then the crude oil prices constantly going up in the last quarter, and so have put some pressure on the input cost, reducing down the margins. Another sector which is not expected to generate very good results is going to be steel sector, because again the demand has been globally less for steel, and as a result of which this quarter obviously companies are anticipated to post not so good numbers. In fact, if you do comparison on year to year basis, most of these companies will report bad numbers. Like JSW Steel has reported loss in this particular quarter. So if you ask me, I still feel we need to, today if you see the SGX Nifty is showing 250 points up. That is because on Friday the US markets have done a good closing, but today the US markets futures are trading in red. But still, because the Friday impact has to be taken into consideration and Monday markets are not open in India, so evening you are going to see that green, at least that is what we predict. So keeping that 250 to 70 points in mind, we will be standing somewhere between 17,700 to 17,800, which means now we are in that zone. If you remember, I told you till the time we are not comfortably going past 17,800, we should not be very, we should not start sounding very bullish on the markets that nahi bas up to Nifty is heading towards 19,000. I won't say it is still so much of a possibility at this point of time. There has to be some more upside momentum in the US markets, only then you can see Indian markets to go past 18,000 level and then move towards its all-time high of 18,600, 18,500, 600 range. That will take some time is what I feel. It's not going to be a smooth upside from here. But yes, US markets have to participate, and for US markets to participate, a lot of things have to come on track. The inflation has to go down a bit. The US Fed has to signal that interest rate hikes will not be so aggressive. Somewhere the war between Russia and Ukraine has to, it has to like sort out kind of a thing has to happen. Some level of, comfort has to come from that side of the world where we feel that, okay, there is going to be some end to this war, which is looking like never ending at this point of time. So the recession in US economy is not yet completely ruled out, but then we are anticipating a recession in US probably in the year 2023. But then, as I told you, always markets are very matured and they factor in all the negative and the positive news much in advance. So it's not like if 2023 में recession आएगा US में, then it is going to have an impact in the markets or it will reflect in the markets also in 2023. No, probably from here, if again markets have to go down, I personally feel 14,000, 15,000 Nifty is something you should now forget for the time being, until and unless something very disastrous or catastrophic happens. Markets are not going to see 14,000, 15,000. At least that is what I can safely assume at this point of time. 16,500, 16,600 is very much possible. We know that the kind of volatility we have in index right now, where Nifty is plus minus 200, 250 every day, it's a very easy thing to happen for markets to go down to 16,500, 16,600 levels. That is very much possible, and that is to a large extent directly proportionate to how US markets are doing. But if US markets are improving from here on, for a lot of things globally going correct, if US markets are doing well, then definitely that will also push the Indian markets on the higher side. This is my personal understanding. So the suggestion is, okay, one more thing. A lot of people ask me this: markets are doing well, index is doing well, but why is the stocks not performing? What you need to understand is, right now the driving force of the market is the bank Nifty. Because the weightage of the banking stocks is so high that if bank Nifty is doing well, to some extent it will also pull up the Nifty index. But that does not mean the stocks are performing well, because even if you look at the heavyweights like the Infosys, the TCS, the Reliance, they are still not performing, guys, and they are still available at a very good discounts compared to their 52-week high. A lot of stocks are available at very good prices at this point of time. So today, when I was planning to give you some trades for Muhurat trading, I have so many stocks to suggest, but the basic problem which we are facing right now is What about the stocks which we are already struck with? Because we have already invested our money somewhere, and as long as my money is not going to come out of those stocks, how do I invest? And then to add insult to injury, what happens is when you see index hitting new highs on a daily basis, but your stocks are still struck. So you, at that point of time, you have to apply your rationale and understand things, that what is it that is causing this push in the market. So right now that is bank nifty. The banking stocks are doing well. But the IT is still lagging behind. If you see, the metal has shown so much of correction. The pharma is not doing well. So there are plenty of, not just plenty of stocks, there are plenty of sectors which have still not participated in the rally. I told you earlier also, I'm repeating it. If market from 17,500, 7,600 has to move to 18,600, 18,500, there has to be a large participation from IT sector. There has to be a large participation from stocks which have still not performed. I told you in my last video also, I would personally not want to invest in banking stocks at this point of time. I'm not saying banking stocks cannot do well. I'm not saying that. But what I'm saying is there is a good time to pick up stocks. The entry and exits are very important. So for me right now, it's not a comfort zone to get invested in banking. You see, logically also, if you think, the one big reason why banking stocks are giving you stupendous results is because of the rate hikes which is happening on a regular basis. So just because rate hikes are happening doesn't mean that, you know, the borrowings will drastically go down or something like that. Even for your existing customers also, just because of that hike in interest rates, you just try to understand how much their NII, the net interest income, is going to go up because of that. Think about it. So if we expect one or two more rate hikes, just assume their profits are going to increase more and more. But things don't change fundamentally for the banking shares. So would I be interested to invest in banking stocks at this point of time? Probably. If you still ask me, I want to invest in banking stocks, my top picks will be HDFC Bank. This stock has not moved at all. It's a safe bet. If you have patience, go for HDFC Bank. Go for HDFC Bank. It's not a special pick or kind of a thing, but HDFC Bank is no-brainer. It's a very good stock to invest in right now. There's nothing wrong with this stock, but the stock is not participating in the rally. But there is no denial, HDFC stock is one of the best in the banking sector. So even if I have to pick up something from banking sector, probably I will go for those stocks which are fundamentally good. There's nothing lacking in the company's corporate governance, but still the stocks haven't participated in the rally, even if the bank nifty is trading above 40,000 levels. In that case, I will go for HDFC Bank. I'll probably go for IndusInd Bank. I still prefer IndusInd Bank. It's a little on a volatile side, having a high beta, but I still prefer IndusInd Bank. The results have been good for this bank also in this quarter. My next top pick would be Muhurat Finance. In fact, I would like to rate Muhurat Finance better than IndusInd Bank. Gem of a stock you can definitely buy, Muhurat Finance. Around 1,040, 45 you will get it. And Shriram Transport, again, Shriram Transport Finance is another good stock you can consider. These are the stocks I would prefer from financial services or banking sector. Achhe stock, still not participated in the rally. These are my picks. Now coming to the Muhurat trades, my Muhurat trades, I told you banking, I personally don't want to go into it. If I have small capital with me and I have to do allocation, banking would be my last preference. But if somebody says, nahi, mere ko to banking mein lagana hai, to aap HDFC Bank or Muhurat Finance ko consider kariye. That is my suggestion. HDFC Bank is trading close to 1450 levels. You can consider it for an upside of 250 odd rupees, which is around 1700. You can consider Muhurat Finance at around 1030-40 for an upside of around 1200 rupees. These are my top picks. In Shriram Transport, as I told you, around 1200 for an upside of around 150 odd rupees is a very good stock. 8 to 10% return is easily achievable in short term itself. Now coming to my picks, I'll give you 5 different stocks which I have prepared for today, and they are obviously, I'm not saying that these are the best, but I have tried to diversify across sectors, not considering IT, because IT I have already told you IT ka rally to abhi start hi nahi hua hai. If you saw my last video, from the point of time when I told you to invest, if you see IT sector stocks which I told you, in 15 days itself they already gave 6 to 8%, 10% returns. But I feel there is a huge upside left in IT sector stocks, huge. We have discounted the IT stocks for their businesses, global businesses and everything to a very large extent, maybe overdone it. So I am still very much bullish on IT, so I am not taking any particular IT sector stock ka naam. But I personally, you want to go with safest, go for Infosys at 1500 for a target of 1800. You can consider buying HCL Tech at around 1027. Easily achievable targets 1150, 1175, 1200. LTTS is my next best pick around 3500. Keep it for at least 38, 3900, 4000 rupees. IT abhi aisa hai, you can pick up anything and everything and you are in the safe zone. So IT is my top pick, guys. I still, if you have limited capital and you want to put it only in one sector, then it has to be IT. Apart from that, now I am giving you a list of 5 stocks, which are my Muhurat trades basically. Okay. My first pick is Polyplex Corporation. Polyplex Corporation का story आपको पहले मैं short में बताता हूँ. This stock was trading last Diwali itself. I remember very clearly. This stock was trading close to 1800. From 1800, it started going up. It was paying very good dividends. The kind of jump they have seen in their profits in the past few years have been very good. It's a high dividend paying stock. Fundamentals are stupendous. Very good fundamentals. It went up to 2400, 2500, then it went up to 2800. When it went up to 2800, and there were these people on television saying, now this is going for 3500 and all. I don't understand why people don't know how to book profits. Booking profits is very important. I keep telling you. There are 5,000 plus good stocks in the market. You buy a good stock, you book profits at the right time so that when again this stock goes down, you have the opportunity. This stock sets a classical example. Especially on Z Business, they do a very wide coverage of Polyplex. Even they recommended Polyplex last year. If you would have seen my InvestorWise page, my recommendations, I also recommended Polyplex with a target of around 2100, 2150, and it happened in no time. Then it went up to 2300, 2500, 2800. At 2800, these people came and they said, no, it will go up to 3500. You should continue holding it. Then it dropped down to 2200, and these people said, now you should book your profits and leave. So at 2800, you don't allow people to book profits. Then suddenly at 2200, you tell people to book profits, and now it has dropped down to 1720 rupees. So it's a very, very classical example of why you should not be adamant in, if it's a good stock, I want to continue holding it. I'm not saying that you don't continue holding your stocks, but then you define your long term as 5 years, 10 years, 15 years. That is long term. That is long term. Then you should not have a problem with the stocks fluctuating by 1000 odd rupees in a year. Polyplex Corporation at around 1720 is a very, very good buy. The current price I think is 1718. It's a company involved in packaging services, having a global presence of around 75 countries. And this global presence is the one big reason why the company's value has decreased from 2800 to 1718 rupees. Because their businesses in US and Europe are getting hampered to a large extent because of the current problems going on. Okay, they are into this polyester films, green wrap films, PET, means different kinds of films are there, which are basically used for packaging. They have transformed a lot of old packaging technologies into the new technologies, like the one I told you, green wrap films and all. So they are having a book value of close to 1695, which means the stock is trading close to its trading close to a 1 price to book value. And I have told you earlier also, price to book value for me is one of the best parameters to decide if a stock is overvalued or undervalued. And getting a stock like Polyplex with a correction of around 1100 odd rupees and trading at a price to book value of 1, there cannot be a better time to enter into this stock. Can it further fall? God knows. Nobody knows that. It can go down, but we have to be prepared for it. But I am saying you this stock can easily go up to 2000 rupees in no time. I'm telling you this very clearly. And this will shoot up to 2000 rupees any day. You remember this video of mine, I will then share a screenshot of it. Fir bolna mat mere ko ki this person shows off a lot. Because if I have it, I'll show off. I'm telling you. Is time ko yaad kar lo. Vlog number 43, minutes number 20. Okay, this is 20 minutes running into the video. I'm telling you, this stock will shoot up to 2000 at any time. You have to just buy and wait for that one fine day when it will shoot up to 2000 rupees. Okay, the price, like I told you, the EPS is 205 rupees, face value of 10 for the stock, 200 plus EPS. That's humongous. And one big reason why this stock is having such a high EPS is because of a very small share capital which it has. It is a very, very small share capital, and that is just 31 crores is the share capital, which means there is a very small liquidity available in the market. Understood? Where promoters itself are holding 51% in the company, FII is holding close to 13% in the company. So the chunk of the holding is in the hands of FII and promoters, and then DII also has a small proportion of holding in the company. 3 to 4% is what I remember. So this stock has very low volume of trading, and whenever the buying comes into the stock, it suddenly surges the stock upside. Definitely consider buying this stock, guys. It's a very good company. From March 18 to March 22, if I compare the 5 years period from 18 end to 22 end, the net profits have grown from 284 crores to 964 crores. And the sales have grown from 3572 crores to 6624 crores, which means in these 5 years, the sales have doubled, but the net profits have almost like become 3 times or maybe more than that. I hope you understood, guys. This is a very good stock. The reserves of the company are very healthy at around 3,300 crores. With the kind of share capital it has, the reserves are very, very good, and that is the reason why its reserves, why its book value is so high. Book value itself is close to, like I told you, 1695, which is around 1700 rupees. Return on equity 17%, net profit margin 14.5%. All in all, a very good stock. If you have to pick up one stock only for Muhurat trade, it has to be Polyplex. Eyes closed, go for it. Okay. My next pick, I already recommended this in my last video also, would be Tata Motors at 398. The 52-week high for this stock happens to be 537, and 52-week low happens to be 324. Currently trading around 398, which means still a lot of upside potential is there. Plus, it did not participate in the auto stocks rally which happened recently. You saw some very good recoveries in stocks like Eicher Motor, Maruti, M&M, but this stock did not participate at all. Even Escorts has done a lot of upside, but Tata Motors has not participated. But let me tell you one thing, the dominance of Tata Motors is going to be too good as far as the electric vehicles are concerned. For September month, you would be amazed to know this, that Tata Motors has done the highest numbers in its history in September month. I think their October numbers will even be better because of the festive season and all. But this stock, you can't go by its fundamentals. If you look into its books, you will see they are having huge losses and all. So you have to go by their book value, which is at 863. Price to book value is just 0.4 times. And you have to go by their future projections. You have to go by their product potential. You have to go by offerings they have in hand, what they're going to launch in times to come. That you have to see. So their recent launch of Tata Tiago EV with a starting price of around 8.5 lakhs is going to bring a big change in the EV sector, because EV car, if you have little knowledge also about cars, you would know people have one big problem with electric vehicles is that the price of EV cars is relatively high compared to your normal petrol and diesel cars. But with Tiago being launched at around 8.5 lakhs, the electric version, it has made buying the electric cars very, very affordable. So there is, I can see a very bright future for Tata Motors from here on. And my first target would be 465 rupees. Around 465. 460, 465 is where you can once book your profits. If you have a little longer vision, you want to hold it for some more time, then I would suggest that if it goes past 465, then you can also look for a target of 525, 530. That is where I again feel there would be a small resistance for the stock. These are my two targets for Tata Motors, but definitely a very, very good pick if somebody has to pick a stock from auto sector. Next would be Godrej Properties, company involved in construction and real estate businesses. It has a high of 2484, which means 2484 is its high, 1129 is its 52-week low, currently trading around 1203, which means there is a huge discount in the stock compared to its 52-week high. The stock has a price to book value of 3.86 times, slightly on the higher side, but still okay. Promoters are holding 58 to 59% in the company. FII is holding around 28% in the company. That's on a very high side. DII holding close to 5%. And once the crude prices are going to come in control, automatically the real estate businesses are going to boom again. Once economies start recovering from the slowdown, the real estate has to give a push. Low budget share, if you want, then DLF is a very good pick, around 369, 370 rupees with a target of 425, 430. But if you can afford to buy a little high value share, then my suggestion would be to buy Godrej Properties around 1203 with a target of 1375. That is my suggestion. Low value chahiye real estate business mein, then you go for DLF. High value share, if you can buy, then go for Godrej Properties at around 1203 with a target of 1375. It's a very good company, guys. From 2018 to 2022, if I just see its net profits, the net profits have grown. It has almost become double during this period. From 228 crores, it has gone up to 539 crores. Okay, so this is a very good buy. And my next pick would be UltraTech Cement. I had to pick up something from cement sector because when the crude prices were going up, we already anticipated that somewhere the profit margins for cement stocks would be on a lower side. We knew that fact, and now that the results are coming in, so the stocks are posting lesser profits, and again a little bit of penalization is happening for the stocks. But now I feel, since crude prices are coming in control, I feel this is the time when you should start focusing back on cement sector stocks. UltraTech I have taken up to be on a safe side because UltraTech is the leader in the segment. I personally prefer it a lot. Face value of 10, stock trading at 6362 is a cheap stock. It's not expensive. आप सिर्फ शेयर का दाम देखते हो, मैं शेयर का वैल्यू देखता हूँ. There is a difference. You just see the price. 6,000 rupees का stock है. How many can I buy? Give me something where I can buy huge quantities. No, it's not required. You should be worried about the percentage. You should be concerned about the percentage returns you can make. एक शेयर खरीदे 100 शेयर खरीदे, how does that make a difference? Your capital is going to remain the same. It's the appreciation of capital that should matter. I want to stick to the leaders in the segment. I'll go for UltraTech. I can give you alternatives also, lesser price may if you have to go, but my pick would be UltraTech. Has a 52-week high of 8269, low of 5157. 6362 is the current price, which means almost a 2,000 rupees discount from its 52-week high. A very good stock. Book value is around 1750. EPS is 231. That is, again, I told you, 200 rupees up EPS is a staggering number. That's a very good number. From March 18 to March 22, if I do a 5-year comparison, the sales have gone up from 31,000 crores to 53,000 crores, which means the sales have almost doubled in the 5 years period, but almost 3 times is the jump in the profits, which means the margins are also improving over the years. It has gone up from 2,224 crores to 7,265 crores, which means they are posting very good numbers, plus they are having good control on their input cost, because of which their margins are improving a lot over the years. Buy it, hold it for a minimum target of 7,000 to 7,100. If it can sustain above 7,200 levels, then it can also go for 7,500, 7,700 levels. That is my suggestion for UltraTech. Downside is very, very limited. Alternative बता देता हूँ. Alternative is Dalmia Bharat at around 1530 with a target of 1,700 for somebody who wants to buy a little less expensive share. I mean price wise. So Dalmia Bharat is around 1530. You can buy it for a target of 1,650 to 1,700 rupees. Another, it's also fundamentally good, but I told you I want to stick to the leader. No video should end without some fun at the end of it. So we have point number 5, the stock number 5, the last one in the Muhurat trading is United Spirits, and I don't have to tell you what this company deals in because most of you are contributing to the revenue of this company. It's involved in breweries and distilleries. So this stock is trading at 820 right now. Low 52-week low is 712 and 52-week high is 1020. So this stock is also trading cheap, and if I compare its September 21 and 22 numbers, COVID time, these businesses were impacted a lot, and post-COVID again, because some state VATs and all were imposed on them, because of which their profitability got hit. But if you compare with last year on year, this quarter results have come. Last year it had a net profit of 286 crores. This year they have done it 550 crores. DII is holding around 11% in the company, FII holding around 17%, promoters are holding around 57% in this company. Okay, so I feel buy it at around 820 with a target of 900, 910 rupees. Recently, mutual funds have done a lot of buying in this particular stock. It's definitely in the radar of high net worth investors, and it's a very good investment. And the kind of product it deals in, we all understand, it's never gonna run out of business. So I'll just now summarize what I said. My first suggestion is to go for IT sector stocks, where I told you Infosys, HCL Tech, LTTS, Mindtree, LTI. These are the stocks you can consider. Apart from that, I gave you 5 stock suggestions. One is Polyplex around 1720 rupees with a target of around 2000, which will happen very fast. Whenever it happens, it will happen very fast. Next is Tata Motors around 398. I think I told you 398 with a target of 460, 465. Then I told you Godrej Properties around 1200 rupees with a target of 1375, 1380. Alternative of Godrej Properties is DLF. आप दोनों नहीं खरीदेंगे. You can buy any one of them. Then you can consider buying DLF at around 370 rupees with a target of 425. Then I told you UltraTech Cement at around 6360 with a target of 7000, 7200. Alternative is Dalmia Bharat around 1530 rupees with a target of 1685, 1700. And last one is United Spirits around 820 with a target of 900 to 910. This is what my suggestion is. So I wish all of you a happy Diwali again. And my only suggestion to everyone out there who is investing in equity markets and taking it seriously is to learn to give equity markets time, and not to waste a lot of time over speculating things, over anticipating, because it's of no use. You won't be able to time the markets at any point of time. It's better to buy good stocks and wait for your stocks to show action. Ultimately, this is one of the best asset classes. Just have to make sure that you do it the right way. That is very important. And if you need any help, I'm always available. You can get in touch with me for any suggestions, or if you want to take any of our advisory services, you can get in touch with me. And guys, chalo, bye bye. Have a bright year ahead, all of you. Thank you, guys. God bless all of you.